If you measure the costs in gold of housing and groceries, they're remarkably affordable. And that will only get worse if this is true, because look, the dollar's lost 97% of its purchasing power over the last 112 years. And if you look at Section 2A of the Federal Reserve mandate, it's funny, it says it requires currency stability. That's right. And so anyways, the bottom line is he's right. And if you save in gold, everything is affordable and cheap. You save in dollars, you're gonna go broke. He's the one who said that. You save in dollars, you're gonna go broke, you're destined to go broke, and if you're not a contrarian, you'll be a victim. There's another ruleism. And so I'm just simply saying he's spot on here, and if what he's talking about happens, they're gonna destroy the dollar to keep the game going by supporting the bond market. They got the front end covered. If Judy's right, they got the back end covered. Who loses? Every one of us who holds our wealth in dollars. One of the things that I've been fortunate with, and I mean this, it's weird almost, like I often will joke around and I say I see all of these things. In my mind, I see a pattern. I connect the dots. I used to call it a linear progression of events with you. I said that for years. And I have either the nerve or the stupidity, the idiocy to say it publicly. Thousands of YouTube videos out there with me making these statements. And one of the things that I said to you a few weeks ago was the significance of the 11 Asian countries and the 5 Middle Eastern countries that have connected to BRICS Bridge, and how this is something very big. We talked about how Sergei Lavrov, the Russian foreign minister, said, yeah, we're opening up the bridge platform, the M-Bridge platform, to non-BRICS nations, right? But we focus quite a bit on these Asian countries. And somehow, luckily, I guess maybe I really was onto something, because there was an article that just came out of Forbes where they pointed out that China is now just the 3rd largest trading partner for the United States, and a distant 3rd behind Mexico and Canada. In fact, in the month of May alone, China was less than 6% of U.S. trade, which was the lowest level in over 20 years.
The new trade network doesn't just sidestep SWIFT, it undermines the U.S. dollar's role in settlement. BRICS has quietly built gold delivery systems into this infrastructure. Already, gold can be settled and delivered through exchanges in Shanghai and Hong Kong. And now Saudi Arabia, who recently joined as a full partner, is building the 2nd gold vault. Here's the playbook. Oil is sold to Asia, paid through the BRICS bridge, and settled in gold, entirely invisible to SWIFT or U.S. regulators. The dollar isn't just being challenged, it's being routed around entirely. This is a de-dollarization strategy in motion.
And then you look at the Asian countries, which is very interesting. These Asian countries that have signed up to BRICS Bridge, together they have a population twice as large as the United States, over 700 million people. And these are also some of the fastest growing consumer markets in the world, with, their middle class is growing. And this group of countries is now China's largest trading partner by far, way ahead of the European Union and the United States. This is coming out of Forbes. And so you have, let's just encapsulate this. You have China's largest trading bloc, which has 700 million people, which is way more than we have. That is not the largest trading partner that is now connected to the bridge system that allows these banks, central banks, to trade with one another, free from SWIFT interference, in a system that settles in 7 seconds at a 98% reduction in fees. And remember what we talked about last week, the BRICS Pay, which is a B2B or a bank to consumer. It's retail. Well, that's hooked up into this system too. So all of these countries who are now working very, very closely with China, that have a much bigger population, and over twice as much as the US, some of the fastest growing consumer markets in the world with a rising middle class, is now able to trade BRICS Pay free from any SWIFT interference, and the banks, the central banks, can trade across this rapidly growing consumer market free from SWIFT interference in 7 seconds with a 98% reduction in fees. So the fact that we talked a lot about it is big. The fact that Forbes just said that they are their largest trading partner now, period, tells you just how big it truly is. And so what you can see is the infrastructure that is being set up, right? And now that we see that you can take delivery in gold in Shanghai Exchange in Hong Kong right now, and the second one is being built in Saudi Arabia.
Beijing's approach is subtle but powerful. The yuan is being internationalized not by force, but through infrastructure. The bridge system allows users to settle directly in yuan and even settle it in gold. No conversion to dollars needed. It's a system with retail capabilities too, via BRICS Pay, a cross-border payment network that integrates both B2B and consumer-level transactions. What makes it politically clever is the absence of BRICS branding. It's presented as a Chinese initiative, sidestepping geopolitical backlash. Yet it has massive reach, gradually integrating oil producers, fast-growing Asian economies, and tech-forward central banks into one ecosystem.
Remember before the M-Bridge stopped being called M-Bridge because of the BIS interference and now it's just called the Bridge? Who was the fifth partner that signed up as a full member of the Bridge technology? It was China, Hong Kong, Thailand, UAE. They developed it with the BIS Innovation Hub. And the fifth member, you remember? Saudi Arabia. They signed up after as a full participant. Well, where's the second vault being built? Oh my God, it's Saudi Arabia. How the hell did that happen? So Saudi Arabia will sell their oil to all of these Asian countries. It'll settle over the bridge network. The West will have no idea because SWIFT can't even see it. Zero idea of how much they're doing. It'll settle in 7 seconds without going through the SWIFT banks. And it will be then, they'll take all of those currencies of the Asian nations and they will settle in gold, if they wish, at the Shanghai Exchange and take physical possession of it. So this is just the very beginning of what I believe is a new system. And the way they are doing it is ingenious. They're doing it in a way that is non-threatening to Trump because it doesn't have the BRICS name after it. It just has China's name after it. Right now, they're internationalizing their yuan, and they're internationalizing the ability to settle their yuan in gold without converting to dollars. Well, how hard will it be just to insert the unit instead of the yuan? It'll be very easy. And so you are now opening up this trading platform to the oil-producing countries and to China's biggest trading partners in Southeast Asia. And you are opening this up in a way, little by little, that when it is fully operational will be nearly impossible to overthrow. It's massive news, Dunnigan, and it just keeps getting bigger and bigger and bigger.
Meanwhile, in the U.S., the Treasury is moving towards centralized control. Corporations may soon be able to issue stablecoins backed by U.S. Treasuries, giving the Treasury, not the Fed, greater monetary power. However, this raises concerns. BRICS Pay's model includes KT, Know Your Transaction protocols, offering almost total financial surveillance. While pitched as progress, critics warn it's a wolf in digital sheep's clothing. True decentralization, the goal of early crypto, is being replaced with full-spectrum financial control. The U.S. government's adoption of these tools signals a pivot toward fiscal dominance and hints at a broader erosion of individual financial privacy.
And it's not going to stop. And I just want to mention two other things before. I want to just go back real quick to Besant, and real quick, because I can't get it out of my mind. But when I learned that corporations worldwide will be able to issue stablecoins, which tracks the Treasury bond flow, you're talking about giving the Treasury massive new power and a new mandate, narrowing the Fed's new mandate, or the Fed's mandate, rather. And I just think people need to take a step back and realize the centralized control under the Treasury, under fiscal authorities. And this is not what stable coins, and this is not what cryptocurrency was meant to be. It's been hijacked, in my opinion, some of this stuff has anyway, by the government. And when you realize, as I mentioned last week, for those who missed it, the interview on BRICS Pay, that the BRICS Pay system has KYC, KYT, and AML technology. And we were talking about what is KYT, know your transaction. So all of this stuff comes at a price. And that price is your privacy is eroding. It truly is eroding. And I think that people need to keep this in mind as well, because this is, it's kind of like a wolf in stablecoins clothing, if you know what I mean. And I just think people need to be careful about that. And when you realize that, you know, Percent more or less came out and he said that, I want to read this to you because I didn't really mention it well, but he said this out loud. What I'm going to do is I'm going to go very, very short term. Wait until this guy, meaning Jerome Powell, gets the rate, and we get the rates way down, and then go long term. In other words, he's going to keep selling the lower interest short-term debt. Then once Powell's term as Fed chairman ends next year, the Treasury Secretary thinks he will be able to get the rates way down, at which point he'll start selling long-term debt to lock in lower rates or do Judy's plan. It goes on to say this is a stunning admission by the Treasury Secretary and by extension the White House that they think they'll be able to steer interest rates much lower through their new Fed pick next year. And coincidentally, Bessent is one of the, obviously on the short list to run the Fed. But why I want people to think about that is that given the Treasury Department and the White House plan to kind of make the Fed impotent, I think the next inflation cycle starts as early as later this year or early next year. In other words, they're admitting they want lower rates. They're telling you this, which is going to lead to more inflation. And I just think it makes really good sense to pay close attention to what they're doing, because it's starting to me to look pretty obvious that they plan to print a lot of money starting next summer when his term is up. That coincides with the issuance of the gold-backed treasuries. That would fit like a hand in glove with my feeling of destroying the dollar to support the bond market. Don't be surprised to see more and more talk of gold revaluation to devalue the dollar, to push gold up much higher, to peg to the long end of the curve, to have zero borrowing costs so we can bring that stuff back as the engine of stablecoin, and the $2 trillion that he thinks he can get through that runs the country. I mean, I don't know of any other way they could be able to do this, but I just think people need to keep this in mind. I don't mean to go backwards, but I think it's crazy when the Secretary of Treasury of the United States flat out says we're going to get rates way down as early as next summer. That's something you should pay attention to.
A stunning revelation emerged from the Treasury, a strategy to suppress interest rates post-2025. Treasury Secretary BSIM reportedly plans to flood markets with short-term debt until Jerome Powell's term ends. Once a new, more compliant Fed chair is in place, rates will be slashed and long-term debt issued to lock in low borrowing costs. This maneuver could trigger another inflation wave and devalue the dollar. To offset the fallout, there's increasing speculation of a gold revaluation, potentially using gold-backed treasuries to stabilize the long end of the yield curve. The implications for dollar savers are catastrophic.
1,000%. And Rick Rule posted something on LinkedIn that it's one of the greatest. I mean, his command of the English language is ridiculous. And sometimes the things that he says so succinctly are just so logical. He said, if you measure the costs in gold of housing and groceries, they're remarkably affordable. And that will only get worse if this is true, because look, the dollar's lost 97% of its purchasing power over the last 112 years. And if you look at Section 2A of the Federal Reserve mandate, it's funny, it says it requires currency stability. That's right. And so anyways, the bottom line is he's right. And if you save in gold, everything is affordable and cheap. You save in dollars, you're going to go broke. He's the one who said that. You save in dollars, you're going to go broke. You're destined to go broke, and if you're not a contrarian, you'll be a victim. There's another ruleism. And so I'm just simply saying he's spot on here, and if what he's talking about happens, they're going to destroy the dollar to keep the game going by supporting the bond market. They got the front end covered. If Judy's right, they got the back end covered. Who loses? Every one of us who holds our wealth in dollars. Anything that comes out of the Bureau of Labor Statistics is a bunch of BS. It should not be BLS, it should be BS. Everything they've talked about, everything that they do talk about, the CPI data as an example, if true inflation was reported the way that it is, there's no way anyone would buy long-term treasury bond at 4 or 5%. However, you tell everyone and convince them that inflation's just 2%, then, a 3% inflation adjusted return doesn't look so horrible, does it? No, it doesn't. But it's just one big lie after another. It's a scam. So on Friday, June 6th, the BLS reported 144,000 new jobs. In May, stocks rallied, gold price fell by $28. On July 3rd, the BLS reported the U.S. had added 147,000 new jobs. In June, stocks rallied, gold price fell by $17 a night. Craig Hemke, I think, wrote this. Thank you, Craig. So they revised the non-farm payroll numbers, and you wonder how the markets would have reacted if these numbers had been up to date at the time.
Every month, the Bureau of Labor Statistics, BLS, releases employment numbers that move markets, but few realize how inaccurate they are. Recent revisions slashed prior job growth estimates by over 250,000 jobs, with barely a whisper in mainstream media. Gold prices sank and stocks rallied on data later proven false. Critics argue that inflation and job data are manipulated to mask the true state of the economy. Key Fed appointments are in flux, and a quiet reshuffling of economic power is underway. As Rick Rule put it, if you save in gold, everything's cheap. If you save in dollars, you go broke.
They revised the 144,000 that we had in May to 19,000, and June's from 147,000 to 14,000 out of 258,000 jobs. I mean, you can't even make it up. So, they say 73,000 payrolls increasing by 73,000 less than had been forecast. So okay, great. But then we find, so it's bad, the numbers that just came out, the jobless rate rose to 4.2%, 73,000 less, but they lopped off 258,000 jobs from the last two numbers. And taken together, those numbers completely change the trajectory of recent trends. So the average 3-month payroll gain went from 150,000 before Friday's release to just 35,000. And so, I mean, I don't even know how this cannot be. And then it gets weirder, of course. So the woman announcing this, her name was Erica McAntifer. And the only reason I know that is because Trump fired her later in the day, claiming political bias on the BLS data. Now, that's silly, President Trump, with all due respect. That's silly because, it's like not counting 100 million working age people who don't have a job in our unemployment numbers because they fall off. Well, how about that? How about all of the stuff that we do, not including food, energy, and housing in the CPI, not putting taxes in the CPI for all of us working? It's our biggest expense. So, look, I just think it's interesting when us tinfoil hat wearing people talk about conspiracies and all this stuff, and I say BS instead of BLS. How much more in your face do you have to know? This is what we saw during the previous administration, and I'm sad to see now we're seeing it here too. It's like they're guessing. And then when they come back and revise it, how many people notice it? Not many. It's the biggest revision in history ever, but it should be bigger news than it really was. And while we're talking these kind of things like the Fed and whatnot, looks like someone named Kugler will step down August 8th. Kugler, a former chief economist at the Labor Department, was appointed by Biden in 2023. And Kugler now stepped down as one of the members of the Fed Governor Board. So that gives Trump room to put someone in now before Powell's tenure is up. So things are going to start to get interesting real fast with whoever fills that spot before someone fills the governor's spot.